Welcome to Inner Circle Boardrooms, Visionary Business Builders. My guest today has spent almost 2 decades in the mid-market, translating R&D tax credits and innovation investments into real strategic benefits. Today, we'll be exploring his journey working for top consulting firms to building a business accounting platform. Paul, you're the founder and CEO of Aspen Waite. Just take me back in time up until setting up the business.
So I'm a chartered accountant and economist. I qualified with Deloitte, who were then the biggest firm of auditors and accountants in the world. And then I was a junior manager for Ernst & Young, where I basically did their big audits. I'm a corporate all-rounder. I worked for, when they were then called Baker Tilly, and that turned me from being an auditor into an advisor, really.
When I think of PwC, KPMG, they started off in financial accounting.
Yeah.
But, you look at them today, they consider themselves to be a top consulting firms across all disciplines. So do you think that's fair to say? Or
I think historically there was a bit of a problem with using the word consultant. Consultants had a bit of a bad image. I don't know whether you'd agree with that. I think consultants tend to conjure up a sort of an impression which isn't necessarily wholly positive. I agree, and this is obviously what I've tried to do. And one thing I can say is that Aspen Waite is fairly unique, and the way that I go about things and position myself is very different to how people would traditionally think of accountants. I think you're right. I would probably, if I was being picky with you, I'd probably put the word advisory instead of consulting. I think good firms today, and obviously the big firm, the top 10 firms are almost obliged to. I think the big firms today appreciate that they have to offer much more than a service. The days of sort of brown paper envelopes with lots of numbers in are well and truly over. So I think I'd say, consultancy and advisory would be fair.
my colleague is an ex-banker for over 4 decades. And if anybody says to him he's a broker, consultant, he really doesn't like that language, because I think it's a lot of jargon as well that's involved in some of that consultancy talk. And I know a number of boards, every time I sit with the CEO, he would say to me, I really hate it, Kay, when somebody approaches me and talks corporate jargon, and they just like it to be in layman's terms, because that's the way most of us have gone into industry. We've been programmed to speak in jargon.
Music to my ears. I've spent my whole life coming over as not clever. Do you know what I mean?
You have to really dumb yourself down, basically.
What a lot of people do, particularly if they're a certain type of person, they make things, everything seems complicated. It's like, well, you couldn't do my job because it's so complicated. Whereas what I've tried to do is to actually talk to people in simple English so they understand what I'm doing. So, yes, I totally and utterly agree with you.
So when you were working for these top advisory firms, what took you on that journey to want to part that large corporate image and start your own? What triggered you?
I was like as good an auditor in the world as you could be, that's probably true to say. Been doing accountancy since I was 14 years old, so I was also an exceptionally good accountant. And I got to the age of 27 and I chose Baker Tilly because I wanted to become corporate specialist, I suppose. And then it was a very hard place to work for reasons I won't go into. The people in the region were not large firm people, should we say. It was very character building, sticking around. But I made a conscious decision to basically complete the journey, which was, to leave when I transitioned to the point where I felt I was sort of an expert all-rounder, which I did. I then went to work. I became a partner in a medium-sized firm, and I became the highest billing partner quite quickly from being the junior partner, and effectively the senior partner didn't like it, I would say, and it was a horrible place to work. I had lots of stress and ulcers and all that, and they basically gave me an ultimatum and told me to stop being who I am, effectively, and be a good boy. And one thing you get with me is what you see is what you get, and I won't have people talk to me like that. I remember actually said, I'm not going to let anyone speak to me like that. So the fact is, because I'm brave and courageous and principled, I basically said, I don't want to work with you anymore. I nearly had a nervous breakdown. I went home, I nearly had a fit. So I like very brave in front of the people, and I went home and had, quite an episode. And so basically I decided that the only thing I could do was to form my own practice.
What age were you at that transition point?
Yeah, so when I set up Aspen Waite, I was 33. I think my business plan had about £40,000 of clients.
So basically you had a book of business that you took with you.
I had one client in particular that was a civil engineering firm in Dorset that turned over about 8 million, that stuck by me, and they became hugely important. Obviously, I was scared, witless, to be honest. I was terrified of failing, letting my children down. I had 2 small sons, terrified of not getting them through school well and all that, But I'm a very resilient person, so I don't think failure was an option. I don't think most people aren't fully committed to the journey or don't fully believe in what they're doing. By means of example to that, I can remember when I first paid myself, it was about 7 to 8 weeks after I'd started. I also can remember the name and the amount of the first new client I got when I was Aspen Waite, and I ended up turning over twice as much as I thought I was going to my first year. It seems a bit naive at the time, looking back on it, but what I thought I was trying to do was to be Ernst & Young, but in a small town. It was like, I'm going to offer Ernst & Young quality, but in a very personal way that Ernst & Young can't offer. I think that's probably, although it's probably rubbish, that's truthfully what I was trying to do.
Tax relief credits for R&D was introduced in
2000 itself by Gordon Brown.
There's been a lot of talk how businesses have taken advantage of these. So just talk me through, how did you get involved in R&D tax relief?
Person that I owe the R&D journey to maybe is a guy called Steve Wettingstill, who is a great man. He founded a company called Crystalline somewhere around 1998, maybe, something like that. And he's still going strong today. So he invented this global patented technology, which basically creates the destruction of the molecular structure of glass. So the glass becomes sharp free, so you can walk on it, and you can see various BBC programs where he's been on, and Dick Strawbridge, if you've heard of him, he did an environmental program, and he walked all across the glass. Of course, I had to do an R&D claim for him. I think it was in 2004 or 5, something like that, and it went through. And I don't know for how long. For a while, I just did R&D claims for my clients. So I then offered an R&D service nationally, and I do mean nationally. I've actually had clients in every single county in Great Britain and Ireland. So I decided to make everything simple. So it was any client, any size, anywhere, any fee. So when I started, what I was doing is I was looking for the people that didn't know they were doing R&D. So I was going for all the hard ones. And what you found at the time was all the big boys and the other firms, they were all going for the obvious ones, the big ones, the certain fees. Just to show that, when I started, the average R&D claim was about 30 grand. Maybe it was a bit more than that. And, but obviously my fee was much less. I've probably had claims where I've got paid less than £1,000. So I positioned myself very much. It didn't matter how big or small you were. It didn't matter if you didn't know what you were doing. I'd find it for you, basically. I would show you that you were doing R&D.
One thing I've noticed is that R&D tax relief sits in a very strange place. On one hand, it's a government incentive designed to stimulate innovation.
Yeah, good word, yeah.
However, on the other side, it's surrounded by the unknown from CFOs, particularly in SME mid-market businesses, worried about governance risks, unsure where the line sits between innovation and operational improvements. Let me start with something fundamental. Why do you think that R&D is so widely misunderstood by so many CEOs, but also CFOs?
I actually think the biggest barrier to R&D claims being made are accountants, other accountants, and overly cautious CFOs. And that comes out of ignorance. And also a lot of it depends on who your circle is, what your network is. My network tends to be very vibrant, open sort of people because I'm like that myself, Accountants typically are grey, dull, and boring. So I think a grey, dull, and boring person finds it easy to rubbish R&D. I think it's interesting. I mean, I remember when I started, for quite a long time, I would actually meet people who would almost say that I was a crook. And you might think that is an exaggeration, but it isn't. People of great intelligence who would sort of make out that what I was asking them to do was somehow wrong. You know, it was bad. They were going to get into trouble. I can remember somebody saying to me, if something is too good to be true, it normally is. If we went back to sort of 20 years ago, it was a very small percentage of businesses took up R&D tax credits. And then maybe over a 10-year period, that number doubled, I reckon, something like that. And then you started to get lots of cowboy firms coming into the market, which was one of the reasons, or the excuse, I would call it, the excuse for why the government then sort of reacted against R&D. As a generalization, if you said to me, what would I be looking for to show me that a company might be doing R&D? I'd probably ask very basic questions, whether it's qualifying. And just, just to be clear on this, there's a difference between qualifying R&D for accounting purposes and qualifying R&D in terms of claiming R&D tax credits. So a company could spend hundreds of thousands of pounds on, say, improving its knowledge of AI or applying AI into its practices, but it's not a global advance. There are lots of other companies that have already done that. So in terms of its own internal positioning, it would be investing in R&D, but it's not actually doing R&D, which is advancing the global position, which is actually the base test of what an R&D claim is supposed to do. So I think it's lack of understanding, not meeting the right people, and not fully understanding that maybe what you do every second of the day is in itself R&D.
I think startups are the innovation tank for the economy. Given the changes in legislation, for anybody watching this, what advice would you give to them who are not already using R&Ds?
The claim size that any company can make depends entirely on its circumstances. So I've done huge claims for companies that are pre-trading, right? And they haven't got to the point where they've proved the concept yet. So they're spending maybe £1 million on trialing this, that, and the other, right? So the sales might be naught, or the sales might be a small fraction of what they're going to end up being because they haven't finished the process yet. So you can have a company. I've done claims for people with no turnover where I've got them over 100 grand. So it could be a company involved in, say, biomass, and they've got to make the biomass plant work. And obviously each plant is different depending on what it's trying to recycle, in effect. So you could spend, literally millions of pounds on finishing the process. You take crystalline. So I've done 1 claims for crystalline, 21 consecutive claims for crystalline in the R&D, because nothing stands still, does it? So he started off with this global patented technology, and then it's always moving on. The next thing, what's the into customers, looking at what the market wants, all this sort of thing. So my personal view is, I think it would be very, very, very unlikely and almost unheard of for any company that was doing qualifying R&D not to want to pursue a claim. I genuinely believe that. As a tax advisor, my opinion is that R&D tax credits are the single best tax incentive in the country. Probably the tax relief that I've used successfully the most in my career would be capital allowances. So, I, for instance, had a client that started with me from 0 that got to over 50 million and market leader. And we would do a very comprehensive capital expenditure budget every year. And I think despite the company growing to being the largest firm of its size of its type in the South Coast, the average corporation tax rate was always below 10%. So it just goes to show what I can remember. I sat down with a client couple of years ago when I picked up their business, and I said, if you do what I tell you to do, I will deliver you a sub 10% corporation tax regime for the next 10 years. Now, you imagine, I don't know, let's say let's say, if I get this right, so a typical client of yours would have 20 million turnover and might make 3 million profit. So on the face of it, that company's paying £750,000 corporation tax. So if I could make that not 750 and make it 300, right, being 10% or less, that's £450,000. So if you said, what's £450,000 less, more earnings into perpetuity, that's got to be worth 3 to 5 million, isn't it? On value, say, So if you take a company that wants to be the best and is always investing in new capex, in new projects, in new technology, and then somebody like me comes along and says, hang on a minute, if you spend that £500,000, I'm going to get you 100 grand of cash. Right? Well, what does that do? It means pretty much, this is true when I started, everything suddenly costs half of what you thought it was going to cost. That's a pretty powerful thing to say, isn't it? I tell you what, you can carry on being the best firm in your industry, and I'm going to reduce the cost of you doing that by a half.
What we're saying is you could even go out there, make an acquisition, and that business could be a level of innovation, could then get some relief on that acquisition.
I have, on many occasions in my life, had clients that bought a company that had never made a claim, and then we made a claim.
Yeah, that's exactly where I was going with that. Yeah. I've also seen inside businesses that innovation often happens below the leadership level, and sometimes the board doesn't recognise that. Yeah. So, but again, to your point about education. So what behaviours inside the business tells you it's genuinely qualifies for R&D, even if the leadership doesn't recognise it? Are there any indicators that you can share?
I think, and this is not meant to be a self-serving answer, quality businesses demand to be well advised. So firstly, you should have somebody who advises you, who knows what they're talking about, who should help you open your eyes. If I spoke to most good CEOs of leading companies and I said to them, do you spend all your time just doing work you know what the answer is? Right? I promise you they'll all say, no, of course not. Right? So the answer is no, they don't spend all their time. So then you say, so how often is it that you come across work and you don't know what the answer is? And they'll say a lot. Because this is the R&D recognition point here, right? So maybe you've started out on a project, right? You didn't realize even that you were going to have to provide a solution, or you didn't know what the solution was going to be when you started. And then you started digging, and then you found, I don't know, plastic infestation in the building plot, rife, and it's throughout it. And then you can't not finish the project off, so you've got to find out a way of getting rid of the plastic, right? In a way where what's left is suitable to be pile drived. You could build houses on it, for instance, right? I call them scratchy head moments, actually. I say to people, all those scratchy head moments where you're not quite sure what to do next, they're probably R&D.
Okay, that's an interesting way to put it. So if I was a business and we know the whole EPC climate change is huge at the moment. So if I was creating a detector that can support in detecting mold, for instance, could that be taxable in terms of using R&D tax credit?
That's the key. If it didn't exist, it would be a global advance, therefore it would, wouldn't it? If nobody else is doing it, what the law says is that whatever the project is, it has to be a global first. Now, it doesn't necessarily have to be hugely clever, and it could, for instance, be making something cheaper. Something normally costs 8 pence, and somebody works out how to make it for 6 pence. That would be an R&D project. Thing traditionally is made out of a product that isn't very environmentally friendly, and someone works out how to make it with something that is environmentally friendly. Obviously, we've had a lot more inquiries recently. So what the Inland Revenue like to try to do is if they challenge a claim, they'll often do a big internet search and they'll type in, whatever it is the project is, and then I'll get rubbish letters, and they are often rubbish, telling me that some company in South Korea was messing around in the same thing in May 25 or something. And then you have to go back and say, well, actually, it's not. Anyway, so that's what the test is. So whatever the project is, it has to be innovative, require ingenuity, and it has to be something that's different to what anyone else has ever done in some way. I do claims for beers. So, you couldn't really say that drinking a pint of beer advances anything other than the person's well-being when they're drinking the beer, could you? But if it's technologically, if in order to produce that beer it required a new method of doing it, then it still qualifies. I've actually got a new client in the last 4 months. One of the claims that I did was Asian people, particularly Chinese people, tend to be lactose intolerant. And so my client produced a range of ice cream that wasn't lactose intolerant. Assuming you were the first person to do this, of course, if you were able to produce a neo ice cream taste out of a range of alternative products, then they in themselves would be R&D.
What if you're not the first to the market, Paul?
Second, then you wouldn't qualify, would you? Because you're not the first.
But what if there's something different about your product?
The bit that was different would qualify.
My understanding is even loss-making businesses, there are some sort of caps now that have been introduced. Have I misunderstood that, or is that correct?
It's interesting. I mean, the tax changes that have been made over the last 5 years have been incredibly regressive, which is quite ironic considering we have a Labour government, for instance. Incredibly unfair and pro-big business and anti-small business, actually. That's a fact, not a political opinion. So loss-making companies historically used to give you the most cash you could get, right? That then pre-March 25 claims, it became the worst. The value almost went, I think, about 300% less for effectively the same thing, just over a couple of years, okay? Now we're into what's called the merged scheme, which is the merging of the large scheme and the SME scheme, and it's much better again. Not as good as it was, but it's much better than the rubbish that was coming out, in between 23 and 25. So now we're into an area where everybody gets 20%. Doesn't matter how big you are, big or small, you get 20% and it's notionally taxed. There are caps, but they tend to be linked to things like PAYE and NI spend. But again, all of these are potentially overcomable if you know what you're doing. There is something called the enhanced scheme, right? I was going back earlier and said that I've done claims for people that were pre-trading, for instance. So on average, worldwide, an average company spends 7% of its turnover on R&D, okay? Now, if we were talking about pharma, that's over 50%, all right? Pharma companies spend over 50% of their revenue on new products, okay? Now, what actually happens in an individual company depends on the individual company's circumstances and what stage it's at. If we had a situation, let's say a company was only turning over £500,000, but it spent £100,000 a year on R&D, then it qualifies for what's called the enhanced scheme. So you actually get a higher rate. You have to have more than 35% of your R&D. So the R&D has to be more than 35% of the revenue. And then you get the enhanced scheme. The way that the revenue works now, everything is based on algorithms and electronic filing, which actually I thought was going to be a big danger to me, but it's actually been one of the best thing ever happens. You now have to, before you file the tax return, you have to file effectively like a bridged claim and a bridged claim in full. That process on the HMRC website requires you to successfully answer every question they ask. So if you were applying for the enhanced scheme, you have to prove that obviously you have spent more than 35% on R&D costs, and that's quite simple. So one box would say, what's the you put 500,000 in, right? R&D 401,000. Well, 401,000 is 80 point something percent, isn't it? So it's clearly more than 35%. So the revenues website would let you do that. Do you see what I mean? But if however you try to apply for the enhanced scheme, but the R&D costs weren't 35%, then it would reject it. It wouldn't let you file it. Very simplistically, we would file, as would any quality firm. You've got to fill in the revenues portal, which forces you to basically, you have to be able to answer all the questions that are in a full report. Then, assuming you've gone past the portal, right, but still, in the first month that the new portal system was brought in, over half the claims were rejected, which is really good news for people like me, because obviously all the cowboys didn't know what to do. I believe the current statistics are 20% monthly of claims are being rejected, which just goes to show again how important it is to get someone who knows what they're doing. Anyway, so what happens is, assuming you've gone past the portal, you then have to effectively file what I would call a technical report, which would be several pages of technical information, what was the purpose of the project? How did you go about it? What was different about it? Who worked on it? What were the costs on it? All that, what were the advances, all this sort of stuff, the uncertainties, all the science. And then at the same time, you then complete a detailed tax comp with numbers. So you would have a breakdown of the £400,000 in our little example. And you'd say, £101 was spent on concrete. The supplier was ABC Limited. 15,000 was spent with so and so. Yeah. Obviously, the best way to get a claim through is to have. So I'd say if a client did what I told them to do, they would never ever lose a claim. Right. But you'd be surprised how many people how few people are prepared to do that. You take effectively my Genesis client, Crystalline. When actually, funny enough, I'm doing their 25 claim now. So we have specific nominal codes for every project. As soon as a project starts, somebody in Crystalline knows what are the indicators that a project started, and then they start posting invoices to it. So effectively, my job becomes almost like an audit. So investing in good systems is well worth it, because we did actually have a detailed inquiry 2 years ago, and it was actually hilarious because the inspector was incredibly grumpy and had been very combative in correspondence prior to our actual meeting. And the meeting lasted 18 minutes because he just couldn't argue anything we said, because we just had everything beautifully prepared, and then we ended up being quite friendly, and having a good chat.
Is there a danger that companies start framing routine improvements as innovation once the tax incentive exists? And what triggers HMRC about an inquiry?
I'd say most inquiries are basically bad luck. I mean, I used to say to personal tax clients, going back in the old days, you probably ought to expect somebody asking questions about your tax return maybe once every 10 years at least. It's nothing personal. I mean, obviously, there has to be some sort of audit process in government, doesn't there? So I'd say, and of course, this has increased for the wrong reasons, in my opinion. So I'd say the revenue inquiry into 4 times more companies than they would have done 3 years ago. I think one of the reasons they do that is, this might sound cynical, when I started doing R&D, I was actually the nominated advisor of the DTI, and I used to share platforms with HMRC inspectors, and everybody wanted people to do claims in those days. The government actually wanted companies to make a claim. People weren't doing claims, and so I was there to say, come on, everyone, it's not as difficult as you think. And the taxman would actually support me and go, yeah, listen to Mr. Waite, he's a good chap, Now what's happened now is quite often it's not like that at all. It's the opposite. So the inspector is doing everything he can to rubbish what I'm doing. He's basically going, inspector, computer says no, computer says no, computer says no.
They're in a cycle where they're collecting taxes as opposed to giving taxes away.
Obviously, the COVID devastated the exchequer, and Rishi Sunak's reaction to that was to basically declare war on R&D effectively, and that's not an unreasonable thing to say. Obviously, with most taxes, and this would be true of capital gains tax, corporation tax, personal tax, the way that the revenues computers are set up is, I would say, is by exception. So as long as your numbers fit in with what they expect, everything will be all right for the most part, probably. If however, I don't know, so this isn't certain, but this might be. So say a company historically has had £500,000 of R&D costs and has typically received 100, and then the turnover hasn't done much, but suddenly the costs have gone up by double, then that might well trigger an inquiry, because the computer would be saying, hang on a minute, what's going on here? There's, something's moved here. Let's have a look. I think inquiries, so in my experience, so like the Crystalline inquiry was an easy one. We didn't lose £1. Probably the biggest inquiry I've ever been involved in terms of intellect, the power of intellect involved and whatever, was a very large company in Wales I've acted for. I think I've done 11 claims for them now, and we ended up losing 23% of the claim across 8 projects. But it all comes down to really, it all comes down to excellent standards, I'd say. If you keep proper records, you understand what you're doing, you record information at the right time, which is obviously what I call playing heads up rugby, not looking back. Now, unfortunately, most of the claims I do are reactive. They can be years after the thing was actually done. And obviously, asking somebody what they did in August 24 is not as good as me asking you what you're doing today. So companies that actually realize the importance of keeping great information, good records, have got nothing to worry about. And of course, the other thing as well is I would say, overwhelming people that do it properly end up claiming more, because obviously the higher level of understanding, the more confident you are about what you can claim. As I said earlier, I think that R&D should be a basic, not something to be challenged or something like, woo, it's radical. R&D should be a staple diet of any innovative company that's got any aspiration to be better than anybody else.
If you were a non-executive director, what would concern you the most about a claim, and what would you need to see before approving it?
So if the person said, effectively, we did this coastal defence project, it was the first of its type. It was the first of its kind we've ever come across. And then I asked them whether anyone else had done it, and I said, do you think a firm of similar competence would have been able to do this? And the person said, yes, I think they could. Then that's probably not very good news. I read a report from the Revenue recently, which was very interesting, and they have identified a number of words which are put into a report they don't like and will almost certainly trigger an inquiry. And they tend to be things like industry leading, cutting edge, words that fall short of global first. I can't think of all the words now, but ones which are impressive but aren't enough. Bearing in mind, that the whole point is that this is supposed to be something that no one else has ever done before. And that doesn't mean no one in Cheshire or no one in Warwickshire. This means nobody in Korea or nobody in Italy. Obviously, I've done a lot of lecturing on R&D and platforms in my time, and I did actually do a presentation once about how I could rubbish a claim in 5 minutes. I could get any good claim and make it into something that would fail within 5 minutes just by changing some of the words. And then equally, there are words that you should use. So equally, you could give me a really not very good claim that would fail, and I could probably edit that, all else being equal, and make it into a good claim, because it's all about presentation. I'd say, as a tax advisor, the best way not to have problems with the Revenue is to play the game and not give any reasons for an exception to take place.
I was just thinking, when you talked about first to market and all these buzzwords, I really simplify it to the point of how could it be scientifically backed, or is there a advancement that would enhance the quality of life cycle in some shape or form?
As a generalization, just picking up on something you said, the existence of third-party evidence is obviously brilliant. So if you've got, say, the product's been tested, it's been independently tested, or you've got some university written this fantastic report about how wonderful your product is, that's highly powerful. It's like anything, isn't it? Third-party evidence is far more powerful than internally generated evidence. So the simple answer to your question actually is, I would say it's very difficult now to make a claim that isn't very good and get it through the portal in the first place. So almost what the Revenue have done and the government, they've sort of helped the whole process, because unless you're able to demonstrate reasonably that what you've done qualifies, it won't go through the portal in the first place, and therefore it gets rejected at source. So I would say, obviously we make people fill in project questionnaires or something better. Like I have clients that will reach a higher standard than that, but that's obviously, we're saying this is the basic standard. If someone wants to give me a Rolls Royce, I'm happy with that. So I'd say the mere fact it's got through the portal, as long as, let's just say that the client's genuine, right, and let's not get into any debate about what that might mean otherwise, then that client would have nothing to worry about. I think there's probably, just realistically, if I and a client have done a claim and we both genuinely think it's all right, if there isn't, like a patent, for instance, is obvious, isn't it? If someone's filed a patent, then clearly they must be doing R&D. There's probably I would say, trying to think how many claims we've lost ever. Maybe seven in nearly 20 years.
What if I've applied for tax credits
Mm.
and they've been declined? Is there a likelihood I will be declined again, or would you advise take 6 or 12 months before you reapply?
So there's 4 stages you go through before you get to ultimately failing anyway. We're a very robust firm, so we fight till the end. What happens is you start off with the normal inquiry of the inspector. So the inspector, after, say, 6 months, basically says, I'm sorry, you're not doing it, fail. We then appeal, right? And then you go through another 3 stages. And if it all else fails, you then end up in effectively mediation. And I think I'm right in saying, of the 7 cases that have gone to mediation, we've won all 7. So this is at the last this is the very last stage. And what's interesting, I think I'm right in saying the first 2 we actually had to turn up, and then the last 5 they didn't turn up. The revenue didn't contest. So they basically went through, made my client go through hell for over a year. We then get to mediation and they basically don't defend it. One of our USPs is that we, as part of our service, we defend it till the end. And so that's what we do.
Brilliant. Thank you so much, Paul. If anybody wanted to get in contact with you, I'm going to include your LinkedIn profile.
I'm always happy to give, say, half an hour for free to talk somebody through, because a lot of it is raising awareness, isn't it? So I'm quite happy to do that.
And thank you so
Okay.
much. I really
Thanks, Kate.
appreciate having you here.
That's really
today.
good.